I know we can have the same concept, but we can be looking for different things when it comes to ultimately finding those entries. So what does SMC actually mean for Bruce?
So for me, I internalize it as a high win rate or an ability to frame drawdown consistently. And that's what makes it smarter than, just typically following a trend. I'm very reversal minded. I'm just a contrarian. So most of my chart, it has a lot of indicators and levels, and I'm literally looking for reversals at these different levels. Now, I've studied a lot of different smart money concepts. Just to name them, optimal trade entry was my beginning. And then I learned the 2022 model, which is a fair value gap. But what's really most important to me, and I'm starting to understand this, those higher time frame point of interest, you want to know what's going to initiate the trade. So smart money concepts kind of showed me what to focus on, because I had so many levels in the past. But now I know that if I'm taking a scalp, because I'm a scalper, I'm looking at my higher time frame, which will probably be like the 15 or the 1 hour. Just on this chart, you can see there's some macros. So these are the ICT macros. This is an indicator. You can type that in and find a macro indicator. And it just kind of helps. You have one? Good. Perfect. So this indicator, I've recently added. I really do like it. And I've had all my success without this indicator. So this is going to help me. But it does already line up with some of the levels I previously used. So this blue line is actually just London's high, right? So for me, I'm trading New York session. I'm waiting till after 9:30, after 10 o'clock. So just hypothetically, price comes up and breaches London's high at 9:38. So that's too early for me to take a trade. So what I would do is simple. Once you learn optimal trade entry, which is just basically Fibonacci, you're looking for a pullback. I want the pullback to be near or on that higher time frame level. So just a simple trade for this morning could have been, all right, as price is melting down below that higher time frame level, I'm going to do body to body. That's how I do my Fibonacci. Everyone can do them differently as long as you're consistent. Price retraces back to the 0.5 level of this Fibonacci, and it wicks perfectly that New York open. I'm going to zoom in so you can see it. Now, everyone has different strategies, but all this is a retest. Price retested a level that it previously breached, and I entered it. And now, smart money concepts, ICT frames this as optimal trade entry. There's a lot of other things within there you could have used, such as order block, fair value gap. All of that stuff will come back and be right tucked into the optimal trade entry. So as long as you're selling above the 50% level, I believe, to be a higher win rate. You don't want to sell, you don't want to chase price. So you always want to wait for price to pull back. I'm kind of all over the place, Gates, but essentially, if price is running in one direction, you want to wait until it pulls back before entering. And that's just my methodology.
Sure. Now, when you're looking, and one of the things that I like about the way that you're describing this is all about confluence. This is not just, okay, I saw it hit a fair value gap. That's a point of interest for me. And so I'm going to go ahead and take the short. We're hitting that fair value gap. We're in that, 50% or better range. So we're back in premium at this point. And so we're looking for that move back down. So now you've got 2 to 3 to, in some cases, 4 or 5 pieces of information that are all telling you the same thing. So now I'm going to ask you, I don't know if you have stats on this or not, but do you know more or less what your win rate is based on the information that you're looking at?
Yes. So my win rate, it does vary. I'm between about 60 to 80%. Now, what that means is I can go weeks and weeks and weeks not losing, right? But sometimes, and this is what I'm working on for this month specifically, sometimes my losses are a bit bigger than my winners. But since I win so often, my risk reward ratio does pan out to like a 1.2 or 1.3 to 1. So I'm definitely like a base hit scalper type of trader. I'm not holding my positions for an extensive period. As long as I can get that 1-to-1 and then add to it, I'm very happy with that. My psychology requires me to win a lot. I can't deal with, I lost every day this week. If anything like that happens, I immediately start reducing risk, and then this hat gets a lot tighter, So